What's up, everybody? Michael and Coco here to do some technical analysis on the SP 500. The SP 500. We're going to be taking a look at the SPX, which is the SP 500 index. We're going to look at the daily time frame, the 30-minute time frame, some patterns that I see, some support and resistance we will talk about. Let's go ahead and hop into it. All right, welcome back. We are here at the daily time frame. I am going to go ahead and draw some resistance that I see. This is an area that a lot of traders' eyes are going to be on, and that is at 31.35. Keep in mind this is on the daily time frame, and this will be somewhat of a zone. So what we'll do is we will go ahead and draw out the zone, and we will label that the bear's camp. It used to be up higher, but because of the recent price drop, we are going to move the camp forward. And the reason why is because the bears made progress. So let's see what that looks like. That is the zone going from 31.38, let's just call it 31.40, all the way up to about 32. Let's call it 32.50 for rounding purposes, or 32.60, whatever you want to call it, that's totally fine. And now why is it that, why are we calling that the resistance? Well, as you can see, right here was a very important level that it did not close above. This pattern that formed, this island reversal on the daily time frame, you can notice that it gapped over this resistance, then it created it as a support, and then we gapped back over the opposite direction down, making it turn back into a resistance. And on today's price action, which we'll get into, you'll notice that it did not break through it and close above it, although it did try to test it. What I find interesting about today's move in price action was that it was a big gap up and started pushing itself higher to try to close the window on this island reversal, which we've been talking about in prior videos. We've been thinking that there's going to be some sort of gap fill here to see where the price action might go past it or if it might get rejected. If I draw out the Fibonacci retracement tool, let's see where that matches up. As you can see, when I draw out the Fibonacci tool, that's exactly at the 78% retracement level right here at the lower portion at 31.38 that we're talking about. Very interesting. Now that we drew out the bear's camp, let's go ahead and look for where all the bulls are hanging out at. As far as the bulls camp goes, we've been talking about this $3,000 range for quite some time. And if you notice back in the price history of the chart, through this area right here, you've noticed a lot of up and down momentum. So there's many different areas of support within this camp. If you wanted to, you can bring it down just a little bit more up into this range, just like that. As you can see, the price action had a lot of volatility within this portion of the chart, and now it is doing the same thing in this portion of the chart. So I would say that the bulls camp is right here and the bears camp is right there. It's going to be a fight between the two to really decide where the price wants to go. And if you notice today's price action, first, it was followed up by a very bullish day, okay? We were talking about this being somewhat of a bear flag pattern where it went down and went sideways, kind of went sideways, and it's been consolidating within this pattern. But we said be careful because it's in bullish context. Well, today the price action gapped way above it. It did not want to even test the support and resistance levels that we talked about yesterday. However, it gapped above it, and then as you can see, this wick came down to touch that level because it was resistance, and then it came back and back tested it, because once resistance is broken, it then becomes support. Now, this candle formation right now, we're going to do a lesson in candlesticks. This right here, these 2 days, this is known as what's called a bearish star. Now, the reason why it's a bearish star is you had a really big bullish day. It gapped above, and then the price action today, this is somewhat of a doji candle, or you can call it like a short body or a long-legged doji. There's a lot of different names for it, but you gotta think of the psychology of what a doji candle is. A doji candle means that there's an indecision taking place between the bulls and the bears. It's trying to decide as to where the price action wants to go. These are also known as some sort of reversal candles, at least in this pattern formation, where the price is really bullish and then it just slows down very quickly. That doesn't doesn't necessarily mean it's going to be from this point down, back down, but it is possible within these type of formations. You might see more sideways action before a decision is actually made, because you have this overhead resistance at the bear's camp right above it. Now let's go ahead and talk why this is an indecision candle and why it's important. Typically with indecision candles or long-legged dojis like this, or just doji candles themselves with the long, wicks, there's typically, what that means is there's a lot of volatility, and there has been a lot of volatility. Now, I want to show you on the 30-minute time frame what I mean. Okay, so here is the 30-minute time frame. I'm going to draw a vertical line. That blue vertical line is basically where the day started and then pushed all the way forward from that point. Each one of these candles represent 30 minutes. Now, what do I mean by a lot of volatility, and why did that candle form like that? Okay, let's go ahead and draw out exactly what I mean. First off, let's look at where the market opened. The market opened right here at 31.30, right there. The market closed right here. The way I see that is by looking at the open right here, and then you look at the close where it closed. The market went as high as today, as high as 31.53, and it went as low as 30.76. All right, so when you look at that, this represents the long upper wick, this represents the long lower wick, and then between that is the price action. So as you can see, if we're looking at just the daily candle, if I remove those blue lines, that is what the daily candle looks like. A lot of price fluctuation, a lot of volatility, and as you can see, this gap up, it came crashing way down here to the level of resistance. It was resistance yesterday that we drew in, this level right here. We drew that as resistance, but now when resistance is broken, it then becomes support. So we're gonna make it a green line. And then it moved up from that point, okay? Kept on pushing itself higher, tried to break through this bear camp right here into the bear camp, which is about 31.37. It did successfully break the high of here, which is back at 31.23. But as you can see, when it broke it, it struggled to stay above it. So it came all the way down. It's been moving sideways since, so it's been in this tight range, and then it came lower, and then at the end of the day, it closed just above it, creating these two levels of support. Now, if I am a trader, which I am, I'm going to be looking at the next levels of support for going into tomorrow. Now, this market has been doing some very aggressive moves overnight. Okay, it's been gapping way up in the futures market, or it's been going way up in the futures market, and then which results in a big gap up or gap down the next morning. So as far as support levels go, these are the ones to keep an eye on. It's going to be just right around that range right here. That's 31.10. And honestly, it's somewhat of a zone, so keep that in mind too. As you can see, the price action of this daily candle, which is just for drawing illustrative purposes only, it came all the way down, right, and then acted as support here, then came up, and then retested it here, and it did not break below it. So these two levels are going to represent a zone of support on the 30-minute time frame. So between 30.80 and 31.10, those are the areas. Now, the 31.10, you can see acted as resistance here. And then as you can see here, it acted as support, support, and support again. So that is somewhat of an interesting level to keep an eye on. That's why we're gonna create that zone. Now, as far as resistance goes, it's gonna be the high part of the day. Okay, that's going to be obviously an area of resistance to keep an eye on. And then also, it clearly struggled at this 31.37, let's call it 31.40, just for rounding purposes again. So we're going to make those resistance, and we're going to make these two the supports. Now that is what you want to keep an eye on this 30-minute time frame and for the price action tomorrow. Now when things get coiled up, right, sometimes the market doesn't want to test those levels, and which it hasn't been, it's just been gapping around. If you remember on yesterday's video, we discussed that this day, the gap down and then the big move up, and then when it broke through this level of resistance, it really created a big boom right here. So this was actually resistance, and then it bursted up to the upside, consolidated, which created some sort of a bull flag As you can see, boom, boom, and then boom, a bull flag. It then popped up way up here on the open and had some really big price confusion throughout the day, creating this bearish star or bearish reversal looking pattern. So the areas of resistance and support that we're going to be looking at going into tomorrow is this 3076 to 3110. And then the areas of resistance, it clearly showed resistance at 3136 and 3153. Keep in mind also, it goes higher. This would be the window that needs to be filled that we've been kind of discussing right up here. Let's call it 3190. That is the clouds in the sky, the island reversal pattern that we saw that we've been talking about, you know, deciding whether if it was not going to fill this window or if it was going to ignore completely. So let me just go hop back over to the daily time frame so we can kind of recap. All right, so we're back here at the daily time frame. The top portion here, this red rectangle that you're looking at, that is the bears camp. That is an area of resistance. Below that is the bulls camp. That also is the area of support. Now the bulls camp, you know, for argument's sake, you could make it higher up to this $3,000 range because that is a very clear area of support. But for just ease of sake, it seems like it could bounce within this range for quite some time potentially. So we just brought the bulls camp just a little bit lower. You can do whatever you'd like. This is just what I'm gonna do. And then to just zoom in here, I want to quickly recap what this means. So this doji or this doji candle or, you know, short body doji, I guess you can call it a bunch of different things. I want to talk about what it did today and why I think that this is some sort of reversal pattern taking place to the upside where the momentum kind of dies off. Doesn't necessarily mean it's going to happen, but really the psychology here is that the presence of a, you know, bearish star, which is what this is, signals some sort of loss of momentum. And typically when there's a loss of momentum, it may be followed by some sort of price directional change. And the reason why typically it changes is because there is a lack of leadership between the bulls and the bears where it's kind of undecided as to where the price action wants to go. That is where you get the small body from where the open and close takes place, but it has a lot of volatility within that day. So we drew out those areas of support and resistance on the 30-minute time frame really based off of today's volatility. All right, so that is all I have for you on today's candle. It's going to be interesting to see where this market goes. And I'd like to just end this really quick by giving another warning message. There has been a lot of talk about the growing expansion of retail investors, specifically on brokerages such as Robinhood, Webull, Thinkorswim. And I want to just let you know that when there's market volatility like this, you can see really big gains, but you can see really big losses. Not to mention when you couple that in with leverage, leverage is very easy, or margin is very easy to get a hold of. And you want to be very careful if you're a novice investor. The stock market, it's not going anywhere anytime soon from my understanding. So don't be in a rush to get rich quick. The market will take away your riches just as fast as it will give it to you. And typically, when they take away your riches, they take more than what you wanted to lose. So, as per usual, monitor your risk. The volatility in the market has been increasingly difficult to place trades. As you notice, I haven't been putting out much live day trading videos, and that's simply because this very choppy weather with the gap ups, but then the price action goes down, and then there's gap downs, but the price action moves up. There's really no momentum right now, and as a momentum trader, I thrive off momentum. All right, everybody, that's all I have for you. Hope you enjoyed today's video. See you later.